Morning everybody, it's Chris here from Serene Education with the 4 Majors News Update for the 1st of September 2011. Crikey, this year is going so quickly. We'll look at the euro against the US dollar on the daily time frame. We've had 2 consecutive down days now, falling from previous highs that we saw price testing the 1450-500 mark and giving away its gains that we saw just recently. Almost a bearish it's an evening star pattern, not as equal. We'd like to see an equal drive, but we got that yesterday. In particular, price rallied a bit in the morning and then managed to close lower. And Asian market trading, we've seen price trading low as we speak. By doing so, price has broken the upswing and this resistance level. So ideally, what we're looking at now is price falling over. We should be looking at price swings to the downside. We've broken that swing over there. There's a slight hesitation now at 14,3500 as we speak. Psychologically, that's going to be one. And the next one below that, we can look at roughly the, what's that, 1433 if I'm not mistaken, possibly. Price swing here. And then ultimately the larger one down the bottom here at 1500. But overall, 1400 would be our next possible goal, because psychologically that is the largest support and resistance level that we've had for a while. A lot of resistance here in early March and through support through the latter part of March, then retested mid-May, another retest in July, and then we've seen price revert higher. So you can see it's been consolidating between these 2 points here, 1400 and 14,500 the past couple of months. And a failure to break above 1455 has seen price fail to rally, as it's done so on 3 prior occasions. So are we looking at a possible downside turn? You could look at the 50-period moving average at 14,300 as a potential target. But ideally, I think we're probably looking at that area there, roughly at 14,300 as a potential target intraday. So looking at the 4-hour chart, if you look at a fib projection from the highs that we saw, so if you took that as the breakout to the downside, the consolidation, and the move up, that's potentially where our 100% of that initial move will take us to roughly the 14,100 mark. So, and where is that falling? Thereabouts. Significant support and resistance level in that area. A lot of whipsawing, but you can see the price has broken this uptrend. Swing high, swing high, swing high, swing high. A lot of consolidation around that swing, and then we saw a break. So by doing so, it's formed a swing low. So price action is dictating that side now on a 4-hour. CTC is red, and as long as we see consolidation and a failure to pull back above 61.8 and finding resistance, then we should see a continuation lower. Look where 61.8 is, around a price support and resistance level. Quite a strong one in particular. So that intraday is going to be your resistance level. So as long as price is trading below that, then we should see extension lower. If it trades higher than that, then we should see a possible bounce higher. So look at that as a guide stick. So 1430, what's that? 14,700. Mark that down as 14,700 as your resistance level intraday. There we go. So you can see on an hourly chart, it's just happening above the consolidation. Notice as we go into this morning, we're seeing lower swings depicting further downside movement in this downtrend. Lower swing, breakout, and we're seeing price trading lower as we speak. Next up is sterling cable against the US dollar. Here again, we see this is the 3rd consecutive day of downside movement. Yesterday we saw a punch lower than the previous swing here in this case. It's breaking through that level there. So price swing. If you look at the extension, that was the high. There we go. 100%, the 161, 261.8 is the next potential target. You could look at it that way, or ultimately you could look at that as the price swing breakout. Consolidation, 61.8 would be that level. 100% would take us down to this level, 161, right down here. But you can see that we have lower swings, and lower swings depicts downtrend, even though we had higher swings going into this. You can see swing, swing, and breakout. Okay, so where is price likely to go to? Well, 50 period moving average as we speak is in play. The CT on a daily is red. So for the first time, you can see the indecision in this. We have red giving us the all go for bearishness on this pair. So we're likely, as I mentioned, ideally the next potential swing. Here's the next one before that. So that'll be our next swing. And notice along this area here we had prior support and resistance. So roughly the 16-1200 mark, which takes us to the institutional moving average, we have a very strong support and resistance level. So ideally that would be our long-term goal on the daily for this time frame. However, on our intraday, we would need to get below this 50 period moving average at this level here, which happens to be also a significant support and resistance level. If you look at it, we had some support, further resistance, support, resistance, support, slight resistance, and we're at this level now. So intraday, we're going to have a look at 1621, 2, 3, 4, 162400 as potential support, which just takes us to that level there intraday. So on our 4-hour chart, that's going to be our support and resistance level. You see price is testing it as we speak. We need to see a price break below that, find support, or sorry, resistance, and then a continuation lower would depict further downside. Notice swing lows going into the setup. It's trading below the institutional moving average as well as the other two. So long term intraday, we're looking bearish. Look at this also on an hourly. There we go. You can see the support and resistance level on this time frame. Price trading below that would definitely signal we should be looking for nothing other than further downside movements. There's the trend, and just recently we've had even stronger ones. So price for cables looking very bearish at the moment, and as long as it can stay below 162400, then we should be looking for ultimately further lows for the pair. If it breaks higher, then ultimately we should be looking at least back up to the price swing at 61.3100 as a potential target. Next pair up is the US dollar against Swiss franc. Well, you can see that the CTC is half complete here. We have our blue arrow and the blue bars. We had a noticeable break above the 80 mark just recently. Are we going to find support? If we do find support, we're going to have a push higher. So price has to stay above 80 going forward. The next potential target here at the 83 mark, support in the previous resistance, and failure to trade any higher than that, and the consolidation here, we see in a pullback. So what we want to see now is a push higher to confirm that we're seeing further momentum higher on this pair. It is trading about both the 20 and 50 period moving average. Excuse me. So need to see 80 acting as a support area now. A break below that would obviously just cancel the move, and then we should be looking for a further consolidation before we see possible further downside movement. So got to see support at this level now. So prior resistance has to be the new support. We've got to see by the end of this week that the US dollar has found a noticeable support area above the 80, and then we should see at least the 83 being tackled quite early, probably early next week's trading, and then ultimately we want to be looking at the potential for further upside movements roughly at the 85.50 mark, and ultimately back up to the 200 period institutional moving average, which happened to be price support some time ago. By doing so, we'll be trading well above the extension. If you look at just the lower swings at the moment now, we've had a breakout, and we need to confirm support at this level now. So breakout, consolidation, continuation. That's what we're looking for, guys. So are we going to get it? Remains to be seen. If you look at price action as you speak now, if you look at the swing, price is in that area. So let's bide our time and see if we do get that for this pair for today. For our chart, put in your support and resistance levels so you can see them psychologically. It's good to view them. So 800 is your support area. Break below that would definitely confirm further downside movement. CTC is giving us a red, but the most important ones on the other side haven't. So we have an inconsistent heads up on that one. 83. Here we go. Look at where on the hourly where the institutional moving average is now. So we have the institutional moving average moving up to the upside. Look at the swings. Higher swings depicting upside movement. Okay. Are we going to get the 80 as a support here? Resistance, resistance, resistance in the past. Notice we have support, consolidation. Are we going to get that bounce that we so require for the US dollar against the Swiss franc to see further upside movement on this bullish breakout? If not, then we're going to see a revert to the downside again. If you look at the consolidation, 38.2 would take us back to the 80 mark. Break below that, then we're looking at possibly 100% of this initial move down here, just above the 70, 8600 mark being our ultimate goal. But as long as 80 acts as a support, then we should see further continuation to the upside for the US dollar. Failure to find support at this level here would see price reverting downside, and overall, if you look at the overall trend or the CTC on the daily, we are still very negative. Even though we had the breakout, the CTC still hasn't given us a blue, which indicates further upside movement. 4 hour has, but we are seeing consolidation, which happens pretty much all the time when you get a breakout. You get a breakout, consolidation, support, and then a continuation higher. That's what we're looking for, guys. Okay, last pair of the day is US dollar, Japanese yen. Whoa, we've seen a lot of movement this morning on this pair. Looking at the daily, we have a nice up candle. The US dollar was trading quite high against the yen pair this morning in Asian market trading. We have noticeable support at 76.50. We have seen for a while price try to break higher and then fail to actually keep hold of that momentum as seen price revert to the downside, and we're still trading in this consolidation range. So you want to be seeing movement either way, favorably upside. So the CTC is still extended negative, and we are hugging the low end of this support area. And if we see a break lower, a nice bearish engulfing, like the candle we saw just recently, then we're going to see further extensions lower. Intraday, you can see that momentum on the 4 hour candle, very, very, very quick upside movement, but that failed to materialize, and we've seen price trading at the low end of the spectrum here, going into the European session open this morning. Mentioned that 76.50 is a very strong support level, so we add that, put that in so you can see it. Now what we want to see is a clear break lower than that. A bearish engulfing, clear indication. You'll notice back here on the 19th we had a break lower, but it wasn't a clear one. See, it didn't break with a lot of conviction. We want to see a bearish engulfing like that, a nice punch, but it needs to punch lower. So it gives you an indication. We had a consolidation and trade lower, but it didn't manage to hang on to that, and that's just clear indication, just a fake out, and we saw price revert back to this intraday trading. This consolidation pattern between the 76.50 and the 77 mark. So you can see there's a definite consolidation band for this pair. So price faking out there on the 4 hour. So ideally we can look at 76.50 as a potential target again for the downside. Here on the hourly, you can see the momentum driven just after the going into the Asian market trading session. Huge upside candle, but we've seen pretty much most of it being taken back. If you look at where price actually started and put a fib retracement, you can see it's broken through the 23.6, 38.2, the 50, and it's heading back down to the 61.8. No kind of slowdown in it, so pretty much up and then straight back down again. No ways about it. A fake out. Institutionally, we need to see price trading about closing above 50. So if we can see price trading above the 76.80 mark, then we could see potentially a bounce higher. Failure to do so would see price reverting back to this downtrend, and ultimately looking at 76.50 as our potential target once again. So that's our support area on a daily. That will remain to be our support area as we trade in this consolidation band. And I mentioned 77 is the upper end of that consolidation band. You can see that price failed to hang on to those areas in early market trading this morning, and so we're back into this consolidation band. That's it, chaps. It's not looking all that rosy on the end. We need to see a clear break and close higher with conviction. If it had, this candle had closed at 77.20 with a lot of conviction, then yes, we would have looked at certainly the 77.65 mark here as a clear trading opportunity. It failed to do that. A lot of wick was showing, so a lot of exhaustion at the end of that, and the next candle was almost a bearish engulfing, and we saw price revert to the downside. So still back into this consolidation range. We want to still see that clear indication of price movement. Otherwise, we're just trading in this consolidation band, and you're not really going to be getting a lot of bang for buck return. So I'd rather stay away from this one until we get a clear indication. Other than that, that's it for today. Hope you have a fantastic trading day. Just have a look at the news, see if there's anything out there that's really going to move the markets. There's a lot of news out today. Just be aware of it. There's a lot happening for the Swiss franc, a bit on sterling, and once again, unemployment claims. We have the revised non-farm product quarter-on-quarter figures. Tomorrow being Friday, we have the non-farm employment change. So we have non-farm payroll tomorrow, and today we're going to get the unemployment claims and the revised non-farm productivity quarter-on-quarter figures. They're expecting a lower figure. Non-farm tomorrow, looking at the previous figure is 117. They're looking at 90. So there's definitely a clear low side to that. If it comes up higher than that, then obviously we're going to see a nice upside move for the US dollar. Lower than expected figure would definitely see the US dollar still trading lower. That's it, guys. Have a fantastic trading day and trade serenely.